Hi traders, and welcome to my video on the Hanging Man Candlestick Pattern. So what this is a candlestick pattern that signifies a reversal to the downside. Okay, so the first thing you want to do is look for an upwards trend. You don't necessarily need any fancy indicators to do that. You can just use a simple trend line on your trading platform. I'm using the MT4 platform. This is a euro dollar 1 hour chart. I find the higher chart time frames to give more reliable signals, hence I prefer to trade them over the 5-minute, 15-minute charts. I'm looking at the 1 hour, 4 hour or daily, sometimes the weekly, even monthly for long-term trading signals. You can use any chart time frame you prefer. Just bear in mind that signals tend to be more reliable from my experience on the higher chart time frames. That's because they include more chart data. Okay, that being said, let's have a look for a hanging man candlestick pattern following on from this uptrend here. Okay, so the hanging man candlestick pattern is basically a candle with a long lower wick, small body, and a short upper wick. So for example, this candle here, okay, you can see long lower wick, small body, and short or even no upper wick. So it's supposed to look like a hanging man. I mean, perhaps not the best name for it, but it does do what it says and is a reversal signal. So we're going to look for the market to fall as it does here. It doesn't necessarily have to be a bearish candle. As you can see, this one closed bullish. Nonetheless, the market did fall. You don't just want to look for this candle anywhere on the chart and take it as it is. For example, there's arguably a hanging man candlestick pattern here, but you're not gonna sell at that low, are you? Well, hopefully not. If you sold there because you've seen a hanging man candlestick pattern, not only are you selling at the low of this move here, you're also selling near a support level. So this is not a candlestick pattern that you want to see and just jump in and start taking trades from. You want to confirm it with other market analysis, which is what we will do now. So to do that, we'll mark resistance, which is up around here somewhere. 1, 2, 3 times this resistance level has been tested. Probably more if we go back, but let's just focus on this. This is actually a triple top candlestick pattern. 1, 2, 3 times this resistance has been tested. So that's a triple top, strong resistance. And in fact, based on that trend line, that's actually a wedge pattern as well. And we're going to look for a breakout to the downwards direction. Arguably, you could have just taken this as it was, this hanging man. That's because we know that price has rejected this resistance level multiple times. We have this big bearish candle here. However, if we did take it, price did move back up, but you would have put your stop loss the other side of this resistance level around 20 pips, so you wouldn't have been taken out of this trade and could have been in this move from all the way up here. And that's just simply based on price action alone. That's not even looking at any technical indicators, which you could use for further confirmation. Okay, bearing in mind that they can be lagging sometimes. Let's just have a look at, let's put the stochastic on the chart and see what that was saying. So with the stochastic oscillator, anytime it is above 80, in or around 80 suggests an overbought market and we're looking to sell. Whereas anytime it's in or around 20 suggests perhaps the market is oversold and we're going to look to buy. You want to sell when the main line is below the signal line, this blue below the red. Or you want to buy when the main line is above the signal line, blue above the red. Okay, so what was the stochastic saying when we had this hanging man? So we had the hanging man candlestick pattern and the stochastic had crossed downwards in an overbought area. That coinciding with the strong support, strong resistance, here, triple top candlestick pattern, and a wedge form there. All good indications that perhaps this would have been a trade we would have wanted to consider taking. Just going back to the triple top, I do have a video on it, but I want to mention when you're looking at the triple top candlestick pattern, you're supposed to draw what's called the neckline, which is basically the level of support within the resistance. So you have 1, 2, the triple top there, and the support, aka the neckline, is there. And basically that pattern is based on a breakout of the neckline, so you wouldn't have entered up here if trading that pattern. You would have waited for this breakout here, which is still a great entry point into this downtrend. Okay, and it's actually good sometimes to wait for it there, because on occasions you'll see price will continue up, or it may consolidate for a while before going up, or eventually falling down, which is why the neckline is usually the entry point based on that particular setup. But we also have the wedge pattern here. As you can see, was still a good breakout and an earlier entry opportunity into this particular downtrend. Stochastic crossover near the overbought zone again. Could have been a good entry point. That would have been the breakout of the neckline around there, confirmed by the stochastic indicator. You do actually have another wedge pattern here. It's almost like a half diamond formation, but you can see price trapped in this consolidation and a breakout to the downside. But really the neckline of the triple top, that support level there, would have been the one to look out for. Okay, so back to the Hanging Man. There it is. If you don't take it as an entry straight away, you can wait for the trend to form. I mean, it would be fantastic to get up to enter here because you're selling at the high point. And if you look at that move, if you would have sold there, let's just say you took it based on the triple top, the resistance, the wedge pattern, had a 20 pip stop loss. I mean, this price has gone almost 300 pips down since. So you would have had plenty of opportunity to take plenty of profit. This is in less than 2 weeks. This has happened. I mean, 300 pips in 2 weeks. This is why I like the higher chart time frames, because if you're trying to get 300 pips on the, say, the 5-minute chart, and you've got a 10 pip take profit target, that is 30 winning trades, and that's consecutive winning trades, or overall, you know, to get that on the 5-minute charts is not going to be easy. And also it means just less time chart watching if you're on the 1 hour and above. Why would you pay broker spreads and commissions and potentially get slipped in and out of trades and stress yourself out fighting price with unreliable signals on lower chart time frames, when you can just take your time and use well-known established price action analysis on higher chart time frames? But yeah, that's probably why a large percentage of retail investors fell. That being said, that's why these videos are here, to help educate you, and perhaps you can get some ideas for your trading strategies moving forward. But going off topic, back to the Hanging Man. So say you had arrived late to the party, we've had the breakout, you've had missed the initial entry, had the breakout here, you've had the breakout of the support there from the neckline of the triple top. Okay, and you still want some of the action. So what we're going to do, we're going to look for another Hanging Man. Okay, the Hanging Man doesn't necessarily always need to be right at the start of a trend or on a reversal. Well, it usually is on a reversal, as you'll see now, even if that is just a temporary pullback within a existing trend. Okay, and there we go. We have a textbook Hanging Man there. See that? Long lower wick, small body, and little to no upper wick as an ideal Hanging Man. And as you can see, it was at a level of resistance, which is great. See that level is held up multiple times. It's Have a bearish spinning top candlestick pattern there. I've got a video on the spinning top candlestick pattern you can watch. Okay, so this would have been a good indicator that price is going to fall. Have an inside bar here, and I don't know, you could have marked that trend there, even there, and then it on a breakout to the downside again. That's a wedge pattern. I think this just emphasizes the importance of candlestick patterns and price action formations, whatever you want to call it. It's just, in my opinion, much more reliable than indicators that can be lagging. I mean, if we were basing our entry based on the stochastic crossing over in the overbought area, we would have missed this trade. That being said, there are instances where indicators will keep you out of trouble. So the ideal scenario is a combination of them all, which was here and here. And to be fair to the stochastic, this was earlier on in the trade. Not to mention, there is bearish divergence for this trade, lower highs. So it still would have been signaling based on that. Plus you did have a crossover to the downside. Okay. So we could have taken that hanging man there, placed the stop loss on the other side of this resistance. Again, a tight 10 pip stop loss, really good. A really good entry point when price still over 170 pips. What you could have done as price was moving down here is move your stop loss with it. Don't just leave the stop loss hanging here and wait for price to turn around and take you out. Never let a winning trade turn into a losing one. That's what they say. So I would have probably definitely when price was stalling around here, I would have been at least break even. And after this big fall off here, I would have placed my stop loss above this resistance level here just to lock in that 30 plus 40 pip profit. In a worst case scenario, if price turned back round, we wouldn't have been at a loss or break even. And as price continued to fall, could have brought your stop loss down, say above here, just to lock in more profit if price turned around. And when price is down here, you know, your stop loss could have been moved even further, just above this level here, which is support 1, 2, 3, come resistance, which is actually being challenged now. Be interesting to see what happens from here. But had you taken this position from up here and had your stop loss here, you still would have been happy to watch this play out. What you wouldn't want to be doing, in my opinion, is looking for a sell trade around here. You know, you don't want to sell at the low. So going back to the hanging man candlestick pattern, let's see if we can find any more. I'm not going to pick them all because I can't look at every single candle, but I'll look for ones around areas which I think are important. For example, here, hanging man again, long lower wick, small body, short upper wick. So if we can see it, I'll just show you that one there. Okay. Again, could have been looking to enter on that breakout. Support lines don't always need to be horizontal. You can draw them on angles. This is a wedge pattern again. See price consolidating in this zone. You have spinning top, almost a spinning top or inverted hammer candlestick pattern there. I've done a video on inverted hammers as well, you can watch. Market indecision, but then we have our hanging man, and this says okay, something's going on here. And price did break out, and if you look at that bar when it did break out, I mean, there was probably quite a few people anticipating this setup here, whether they were using the hanging man candlestick pattern or the wedge support. Yeah, probably seen this trend and want to get in on the action. before it's too late, and that would have been another good potential entry opportunities. You can see the stochastics, unreliable again. You know, we would have, if we were waiting for a crossover in the overbought zone, we would have been waiting. That being said, let's take it back. Maybe the stochastic isn't so unreliable, because we did have a crossover near the overbought zone up here, which would have been potentially earlier or maybe the same, but nonetheless, if you were trading, say, the inverted hammer candlestick pattern, you could have got in here. Again, you would have seen that this is a resistance level. It's been hit multiple times, almost a diamond formation. Could have been looking to trade on the pullback there. Okay. And again, price continues moving down. I'm just going to pick another hammer, hanging man candlestick pattern there. Long layer wick, small body, small top. Price has had a pullback, forming a new level of resistance. Could have entered there. Okay, interesting thing about that one is the stochastics was overbought and crossing downwards, so that would have been confirmation for that trade. Another one, hanging man on the pullback. Wait to see what happens. Okay, we see that this level of support over here, well, all the way back to there, has become resistance and is holding up. Stochastic crosses over in the overbought area. 80 odd pips. Okay. So basically the hanging man candlestick pattern is easy to spot. It's just where it is occurring is what you want to look for. Okay. So it's a reversal pattern to enter into short trades, sell trades, to catch market trends. Okay. And you can confirm this with other candlestick patterns, price action analysis, technical indicators. As always, have good money management. I like to cut losing trades short and allow winning trades to run. Use a trailing stop to maximize the potential of a move. Okay. Hopefully you found something useful in this video. Thank you for watching. Please like and subscribe for more. Catch you on the next one.